And the U.S. stock index futures fell into the red ahead of Tuesday's open. At around 5:30 a.m. Eastern Time, Dow futures were down 182 points, indicating a fall of 152.38 points at the open. The Nasdaq and S&P 500 futures also pointed to a negative open for their respective markets. U.S. markets are reopening today after a long holiday weekend in light of President's Day. In the previous session, U.S. stocks finished in the black but off their highs as developments in the U.S. political space unfolded. Investors will continue to keep an eye on the bond market as the prospect of higher interest rates continues to rattle sentiment. In earnings, Home Depot, Medtronic, Walmart, Domino's Pizza, Cracker Barrel, Six Flags, La-Z-Boy and Lending Club are due to report. In economic news, the Philadelphia Fed's non-manufacturing business outlook survey is scheduled to come out at 8:30 a.m. Eastern Time. No speeches by members of the U.S. Federal Reserve are set to take place. In Asia, shares closed lower today after a relatively quiet overnight session due to U.S. markets being closed for a holiday on Monday. Japan's Nikkei 225 lost 1.01% to close at 21,925.1 as financials, manufacturing and energy-related names traded in negative territory, while technology stocks finished the day mixed. Over in South Korea, the Kospi slid 1.13% to end at 2,415.12. The Australian ASX 200 finished the session off by 0.01% as the 1.93% gain in the information technology sector was offset by declines seen in other sectors. Hong Kong's Hang Seng Index ended the session down 0.78% as markets resumed trade after a long Lunar New Year weekend. Markets in China, Taiwan and Vietnam remain closed for the Lunar New Year holiday. And back here in Africa, Zimbabwe's central bank plans to sell bonds for citizens outside the country to invest in gold and tobacco output, as it also introduces banking rules to encourage money flows and exports. The Reserve Bank of Zimbabwe says it will provide the market with more information on the diaspora bonds in due course. The Southern African nation was once the world's second biggest exporter of top-grade tobacco. The bank says lenders must give exporters access to all the foreign currency they get from selling goods within 14 days of the funds being deposited. The new policies and plans come 3 months after Robert Mugabe was toppled as president following 37 years in power and replaced by his former deputy Emmerson Mnangagwa, who has been on a drive to revive the economy and attract investment. And it's been a bad start to the year for Zambia as investors are beginning to doubt the country will secure a $1.3 billion IMF bailout after government fired finance minister who was key to the debt talks. Reports say its Eurobonds are the worst performing debt among emerging market sovereign issuers, having lost 5.8%. On Monday, the Kwacha weakened 1% against the dollar, the most globally, to its lowest level in almost 6 weeks. Without a deal, Africa's second biggest copper producer could be in trouble, given that the IMF said in October it was at high risk of debt distress. Last week's events did little to reassure traders. In the space of 2 days, the government announced plans to restructure its bilateral debt with China and replaced Finance Minister Felix Motati, who was key to the IMF negotiations and widely seen as a steadying hand on the economy. The Washington-based lender then rejected the government's borrowing plans for a second time on Friday, saying they continue to compromise the country's debt sustainability and risk undermining its macroeconomic stability. And Cairo traded stocks ranging from real estate to consumer-focused companies, industrials and banks are set to outperform local and emerging market peers as interest rates drop. This is according to analysts and investors. Now, after the Egyptian central bank cut its key rate from a record level last week, investors are likely to score the stock market to replace returns from high-yielding deposits. Companies will benefit from access to cheaper credit in the Arab world's most populous country. Cairo's benchmark EGX30 index has advanced 1.3% following the central bank's 100 basis point reduction in its key rate to 17.75% on February 15, the first cut since the currency was floated in November 2016. Since then, the equities gauge has soared more than 70%. And Steinhoff International Holdings has lost a case against a former business partner related to how it reported financials for 2016, piling further pressure on the global retailer that's battling an accounting scandal. The Amsterdam Enterprise Chamber ruled on a case brought by Andres Seifert's OM Handels and MW Handels businesses that the owner of French furniture chain Confarama mattress firm in the U.S. and Pep Clothing in Africa must change its accounts to show it held a 50% controlling interest in Poco, not 100%, to reflect the part ownership of Andres Seifert. The lawsuit predates the reporting by Steinhoff of financial wrongdoing that's wiped almost 90% of the value of the company. Nevertheless, the ruling may be indicative of how other legal authorities rule on the company, which is being investigated by regulators and courts in various jurisdictions and is in regular talks with lenders about maintaining liquidity. And Africa's top bullion producer, AngloGold Ashanti, has posted lower annual earnings hit by restructuring costs and $46 million in provisions for an expected settlement in a class action suit related to a fatal lung disease. Adjusted headline earnings for 2017, including the impact of retrenchment provisions in the South African region of $71 million post-tax, and the provision for the settlement of the silicosis class action claims and related expenditure of $46 million post-tax. As a result, adjusted headline earnings amounted to $9 million versus $143 million last year. The company declared a dividend of 70 South African cents per share. Gold mining companies have made provisions amounting to about 5 billion rand, while close to 4 billion rand is available from a compensation fund which bullion producers have been contributing to for years.